Welcome back to Deal Flow. Ryan Ray here, as always, on this lovely Monday here in Granbury, Texas. My guest is an SBA guru. You've done like $100 million in SBA loans. Is that right?
Yeah, yep. Um, Sourced, vetted, closed, 100 million SBA loans.
Wow. Well, maybe give us a quick introduction, who you are, what you do in the SBA space, who you work for, and then let's hop into it.
Yeah, absolutely. Thanks for having me here, Ryan. My name is Zach Schmidt. I've been in commercial lending for a decade now, in one facet or another. I started off, spent 5 years in underwriting. Decided after a few years into that sitting in a basement where it was always 72 and fluorescent just wasn't going to be my shtick for my full career. So about 5 years ago, I made the transition into a lending role and primarily focused on SBA loans. Currently work for G Bank, community bank headquartered in Las Vegas. We've got a national SBA presence. Do a lot in the hotel hospitality sector, but my area is more agnostic, searching outside of the hotel hospitality space. Um, I'm up in sunny Minnesota, and just kicking it, trying to stay warm.
Okay. So from the SBA standpoint, there's two major programs people talk about, the 7A, the 504. Are you working on both? Do you specialize in something other than that? Where do you come in on what's the main type of loan you're processing?
Yeah, processing 7A loans.
Okay.
Past position, I did 504 loans as well now, but now just focused on 7A and some USDA loans here and there where it makes sense.
Yeah. Okay. Nice. And so it's interesting because we got into the SBA space on accident, to be honest with you. We do, off market searches for deal flow, and we had people go, "Well, can you help me get financing?" I was like, "Well, I mean, yeah, I guess." So we kind of stumbled into it, and then you kind of realize it's a weird world spot that we're in, kind of that loan broker, not with a bank, not a direct lender, packaging maybe is how you want to refer to it. Because when you think of people that you know that are mortgage brokers, they have like a license and all this stuff. And so it's kind of the wild west on the commercial style side, which you wouldn't think of. You would think that'd be more of the residential side, but it seems to be a little bit more. I don't know. Maybe there's something like this in the commercial side of things, but it just seems to be more of a, I don't know, entrepreneur's playground on the commercial side of things.
Yeah, I mean, I think you kind of hit the nail on the head there. It's a large reason why I love playing in the sandbox is because there is a lot of creativity that you can bring in and pull in, whether you're in the packaging side or you're in the lender's role. Even the entrepreneurs that are looking to buy the businesses too, they can get creative in how they structure their LOIs and get a deal to work out that's equitable between them and the sellers. So it's always fun to be meeting new referral sources. Like you said too, you think of commercial real estate, you get licensed to be a broker. But man, I've got referral sources that are past clients of mine that they just have a big presence in certain communities, and I've got referral, situations worked out with them too, where they get some kickback, and it works out.
Okay, so let's unpack. $100 million in SBA loans. For the 7A, the top end is 5 million. So you've done a lot of transactions, and obviously they're not all 5 million transactions. So you've done a ton of transactions. Let's talk about some trends that you've seen on the negative side. Things that you see most common that stops deals from happening. What are some of those things?
Yeah, great question. So some of the things that stop deals from happening, um, just crazy valuations on businesses that are just not reasonable. Oftentimes that's a deal that doesn't have a seasoned advisor, broker, intermediary involved. Um, and it's maybe not as someone that's not as educated on the buyer side as well too, to know how to do the financial forecasting and modeling from historic financials. So that can really throw a curveball off because the seller's got sentimental feelings attached to the business and sale, and They think that it should be valued at the top of the market, but from a financing perspective, profitability, as you and many of your listeners know, you know, you don't want to pay, $1 million for something that you're going to lose money on. It needs to make sense in cash flow. Um, so that's something that I've seen more recently, a lot of outside broker deals. And then another one I'd say too is the recent SOP changes from the SBA. There are a lot of cool things that did happen there. But there are also, I think, made it a lot more gray in other areas too, which it's tough to delineate and get people comfortable with, whether it's external or internal with the bank too. And some of that has to do with their new slogan of, do what you do, making things just gray. So you have to go back to them and ask them questions like, hey, if we got into a situation where we land on this, but the deal goes south in 3 years, I mean, are you going to uphold the guarantee? So some of the gray area, it makes it more difficult internally to sometimes get the credit people on board and thinking in alignment with the business development side of things, the buyer side of things, just to make sure that the integrity of our SBA guarantee is maintained.
Yeah, and that's one of the things I think that maybe, if you're a listener and you're not on X or Twitter or whatever we call it these days, getting on there, finding people like yourself and other people in the community that talk about what they've seen, what they've done. You'll see the people going, "Well, I tried this and this worked," or "I tried this and this didn't work," or "How do you solve this problem?" And I imagine it's it's such a great resource just to get in there and kind of watch and learn people really nitty gritty stuff. Like, man, like, oh, how did you solve this problem? And so if you are considering the SBA process, you can reach out to someone like Zach, but also just following the conversation on Twitter as it happens, about new SOPs or changes or problems that they didn't. I mean, I saw just the other day someone talking about getting a second 5 million for the same NACE code, and how they went through that process. And there was some debate over, could you do this or not? And so there's all kinds of stuff that's out there. And so it is what's like 500 page document, something like that. It's
Yeah.
pretty extensive of all this stuff. And so you can't read it, but there are tools to do it. So, okay. So improper valuation is one. Um, what do you think is the best resolution to that problem? Is it having the business to give an evaluation from an independent third party? Would you guys do that evaluation early on? Like if so, if I'm a buyer and I say, hey, I want to buy this business, will you guys just look at the numbers real quick to make sure it's worth what they want to sell it to me for? How do you solve that problem?
Uh, yeah, I think solving that problem is getting someone to represent you that has years of experience. Um, I think education is a big piece, and I think as the ETA, M&A becomes more in the main street zeitgeist, I think you'll have less of those instances where the valuations just don't make sense. But yeah, my advice is bringing on someone who's been through this process that would represent you. I think overall, they might have to pull you in, rein you in on what the valuation might be, but they're overall going to make the process much smoother for you, set the proper expectations. Timelines are just way better because they know what you should be packaging and preparing up front. Or on the flip side, if that's the valuation that you need, for like your retirement or something like that, I think that they do a great job. Someone such as yourself as an advisor can set them on the path of like, well, this is what we need to accomplish to get to that valuation. So can we hold off a year, 18 months to get those things in place?
Yeah, and it's interesting because it's these conversations are we're talking at kind of a high level, and the part that gets missed sometimes, and I'll see this on Twitter, is many sellers that I talk to. Not everyone is expecting a big check today, right? Some are. Some want a big check today to sell their business, but not everyone is. And there's a lot of ways to structure deals. Now, the more creative, to use a term, you get to structure the deal, the smaller the pool might be. But there also are people out there, and so I think it's a balance for people looking to buy a business of what kind of runway do you actually have to make this acquisition in. Um, Determines how creative you can get. But if you have a lot of runway, you don't have to force an acquisition today because you want to get the terms that you want, and those people are out there. However, though, if you really need to get the deal done because of your capital situation the next 6 to 12 months, you probably got to get levered up pretty tight, right?
Right. Yeah. Um, no, that's a great point. Yeah, the earlier on in this process, I mean, if you know that you've got you're starting with a 5 year plan, that's really how you're maximize that valuation, your experience in the process. Um, yeah, I'm a big proponent too of just surrounding yourself with trusted advisors that know what you don't know, and can, share their expertise and help guide you. It's going to cost you something up front, but on the back end, you're going to recoup it all.
One of the things um, that you'll hear talking to various banks or direct lenders is, um, and we find this a lot is, Bob goes to his local community bank and they go, yeah, we have an SBA department, right? But they're not really SBA lenders in the sense of they don't have a specialty in doing that. So maybe break down the categories. You got to have the specialized community bank, which might have an SBA department. Then you might have banks that really just really focus on that primarily. But even then, just because the SBA program allows it doesn't mean each bank will necessarily take on the loan. So, how does someone decipher what is the best bank or direct lender, however you want to rephrase that, to use for the SBA process?
Yeah, that's a great question. And that's, I mean, going to be time intensive and varying from deal to deal on the type of deal it is. There can be an asset heavy business that's got real estate, like a manufacturing company, or it can be something that's property management and all contract based. So there'd be different appetite levels. I think going back to, hitting on the conversations that are had on these social platforms, like you said, X and LinkedIn, a lot of us are out there, marketing ourselves and promoting what our banks have an appetite for. So I think from a buyer perspective, going out on the platforms and looking into different lenders' profiles, you'll start to pick up some information there. And I think what you that might help you narrow your list down. But then after that, I mean, just sending out a DM just to say, hey, can we do a quick 15-minute discovery call? We can hit the high points and see if this is any potential. Um, I it's my job to know our credit box like the back of my hand. So um, if you have any listeners that do have pending deals or just questions about what the different credit boxes look like, I mean, I'd welcome any DMs and questions after this.
Yeah, we'll link to your X profile and anywhere else you want to in the show notes for people to connect with you. Um, But so, but I guess the next question then is, okay, so they go to Zach and Zach's like, hey, this is not for us. Do you then disclose if it's not for you guys or if it's not for the SBA? Because those could be different things. And how does someone determine whether it's not an SBA deal or it's not a bank deal?
Yeah, great question. So it's the buyer is going to have to educate themselves at least a little bit up front. Likely there are some resources, but like you said, the SOP is a 500-page document. And if they can do a quick preliminary check just to see if it's um, a viable deal. And sometimes if the deal is listed through a broker, it'll say, SBA pre-approved too. Um, but I'll give out that information, whether it's, I want someone to know that they've got, something here that they can sink their teeth into and run with. Or it's just something that they need to find different means of raising capital altogether to execute on. And I think that's kind of the beauty too of this community is if it doesn't fit my credit box, I probably know someone else or have talked to someone else where it fits right into theirs, and they'll pick it up and run with it, and I can make that introduction.
Yeah. No, it's it's one of the things that we come across is the partner buyout aspect, and how little partners in business realize that you can use the SBA to buy your partner out, and how many partners are frustrated with each other and they don't realize that Bob can't doesn't want to swing the deal for whatever reason, but Tom can buy him out using the SBA. That's one of the things that we've tried to educate potential sellers on. If I'm going to call them and they say there's two partners, the first question I ask is, okay, does one want to buy out the other? Now, obviously, there's a certain size that it doesn't matter, but in this SBA price range, does one partner want to buy out the other? Is that even is that really what's going on here? And it's not always, but a decent percent of the time, that's actually what all that wants to happen. They don't both want to sell. One wants to sell, when the other one wants to go or stay or whatever. Um, so I found that to be one aspect that's a lack of education that potential business owners might be need to be aware of. Um, and then the second one is, these deals on Twitter. Again, the whole rave is, I talk about this on the podcast, feels like every episode now. $1 million in EBITDA and up. And there's all these sub $1 million deals that are out there that people want to sell for. What is a niche maybe that you've seen, or an area of the market that you get a lot of questions about, that you're like, man, we could do a lot more deals if people realize that you could use the 7A program for these type of for this type of offering?
Yeah, good question. The partner buyouts, yeah, I mean, that's a big one that I've seen a few of those deals. I've executed on a few of them. A few of them just haven't gone through because people can't come to terms and personalities get into the mix. I think another one is real estate, where it's it's leased facility. It's a dentist office, and they're leasing, and now they've gotten to the point where they want to purchase it. The SBA can do just real estate transactions with 10% down payment. So I don't think a lot of people think of that as a means to move forward and acquire that asset. I think another would be expansion loans, or bolt-on businesses. So if you are, I guess something that I'm looking at on a couple deals, or actively working in like the assisted living space. I've got a few deals right now where they're looking to acquire their second location that's within an hour's drive, so we can classify it as an expansion deal, to where they actually don't need any cash into the deal, and we can use the existing equity on their balance sheet, listing their first entity as a co-borrower. So it's just a great opportunity to expand existing operations.
You touched on there, I think, or a minute ago. Who is liable to pay off this 7A loan?
So can you repeat
Yeah,
that, please?
who's on the hook to pay the loan off? Who like the personal guarantee aspect is what I'm getting at.
Oh, yeah. I mean, first and foremost, the business is on the hook to pay the loan off, but yeah, anyone that's involved in the business with a 20% or greater stake has to sign a personal guarantee. So if operations, do become insolvent, then we do have to lean on that guarantor to come up with a repayment plan. We have to look at liquidating uh, business collateral, potentially personal collateral that was pledged. So the onus really does fall upon that owner operator generally, and then if there are any other investors that are in at a 20% ownership.
Yeah. Okay. So people hear that and they go, "Oh man, personal guarantee, like house, boat, place in the Grand Caymans." You know,
Yeah.
how often does that stop deals, and how should someone evaluate hearing that go, "Oh," because we talk 7A and man, go buy a business. It's like there is a risk here, and it's not just the business going under. It's this is probably one of the greater risks. If you set your LLC or your corporation up properly, you got your protections in, then there's protections from the as long as you don't commit fraud. There's protections on the business legal structure on how to protect yourself there. But this is outside of that, right? This is a separate potential risk. So how do you advise someone on whether or not they should take this? I mean, is that something that you guys get into, like, or maybe what's the personality of someone that should take this? Because you could buy a bill, you could buy a small SBA, get a small SBA deal, but you get one up to $5 million. That's a lot of money that you're on the hook for.
Yeah, I mean, unless you're a real self-starter, someone who's got just you need to have a certain amount of confidence in yourself, that you can do this. And you know, people that I speak with, I can generally tell, within a couple conversations, if not the first conversation, of whether or not they're going to be a good fit for the business and for the SBA program and the risk profile, just by the initial kind of canned questions I'll go through with them. And usually those that are prepared and quick on their feet, that say, well, if this happens, I'm going to shift and do this, and then if that happens, I'm going to do this. um I find to be someone that gives me confidence in working with them. That their mind works in that the business space, and that they're problem solvers. So I think being a problem solver, if I'm asking you questions that kind of throw you off a little bit, and you can recover and make a give me a good response, um, those are the people I'd say, yeah, you should move forward with this. I think you'll be fine. The risk is going to be worth the reward. And then knowing that the bank's interests are completely aligned with that person, they should take some reassurance in that too. That's why the SBA process, it's a lovely program, but it can be daunting at times. There's a lot of paperwork. We want to go through our strokes to make sure that you are going to be successful, from the standpoint that this is a clean business that you're going to be taking over. The cash flow is clean. There aren't any pending litigation or outstanding taxes from the seller that we'd have to worry about. So all of those concerns can be removed, and you can just focus on, this is where we're at day one. When I get in the driver's seat, how am I going to get to point XYZ down the road?
Yeah, and I think it's important here because, as you allude to earlier, the bank wants to give these loans out because they make money on them, but they also had to make sure that the loan checks all the boxes so the SBA will cover the loan if there's a problem with it at the back end. And so it's not that you guys are trying to disqualify people just because you're angry or you're mad or you don't want to do deals. It's just that there's kind of two sides of the coin, right? There's a desire to do it, and there's also a desire to make sure that you meet the SBA requirements. I remember when all the PPP stuff was out, and looking at some of that stuff, going, "Oh my gosh, if you get the thing wrong here, you're gonna be on the hook to repay this money." And a lot of people didn't read that guidance properly, and were on the hook to pay back the money instead of getting it 100% relieved. And so, I bet maybe there's at least sometimes people say, "Well, the banks don't want to give out the money." That's not always the case. I mean, I guess there's probably some cases that's true, but generally, it's just making sure that the boxes are checked. And so, you've kind of said this a few times, but a lot of this is about just having good processes, paperwork, having your ducks in a row to go through this process. And you brought up a good point about the mentality. The searchers that we talk to, that they're putting maybe 5 to 10 hours a week into searching for their business. They're talking about hiring us out. They're not going to buy a business. Send me anything, you got to look at it. Okay, they're just not going to buy a business because they're not like, you have to be kind of crazy to do this. Ask my wife; she'll tell you you have to be kind of crazy to go into business for yourself, and you have to have a very very high risk tolerance and a belief that if this thing goes bad, you can fix it. And not everyone has that, and it's not a good or bad thing. It's just a thing.
Yeah. um I couldn't agree more. It's not something you can dip your toe into. You have to be both feet in, uh, willing to jump into it. And yeah, the SBA side of things too. I mean, there are several rules that whenever I run into them, I mean, it frustrates me to no end, because it's a solid deal, but there's one thing that the SBA, whether it be like a licensing issue, or I don't know, just there's so many different rules that could hinder a deal. Um, it's not that, yeah, we don't want to lend them money, but we need to reassure. I mean, if we've got, if we're financing $2 million in goodwill, I mean, that can be a big hit. I mean, for a lot of institutions. I mean, the bank that I work for now, like I said, it's a 2 location bank that just has a national SBA presence. So, I mean, if we're not thorough and prudent in our lending, um, it could mean and have a large impact on a number of people and jobs. So it's something to take very seriously, and you just don't want to put people in bad positions either. We're all in this to make money, right? Feed our pocketbook, but you also need to feed our souls too, and set people up for success. And that's the rewarding part of the job, really, is either connecting with people or connecting them with others in an industry, that that are going to help them succeed, but then, you know, seeing their LinkedIn post a year from now or 2 years from now, and they've got their kid working in the business or something like that, and they just, their lives revolve around it. It's feeding their family and it's feeding the families of their employees.
Okay. Final thing for me is we talked about using the SBA to buy a business so that people don't know, and they would learn this going through the process. But it's not just buying a business. I mean, I think if you're going to buy a business, you also have to consider getting a working capital loan right out the gate, right? Because vendors might not pay. There's all kinds of things that could come up like day one when you transfer ownership. It's not, this is not buying a car where you just drop the lot. There's a lot of stuff that go wrong, not because people are being malicious. It's just vendors and credit cards and bank accounts, all this stuff is got to get swapped over. And so your payments could get, delayed. Um, how do you advise people on taking out an additional working capital loan when they buy a business? Always, sometimes, depends. I mean, obviously they got a bunch of cash is one thing, but if you're the average buyer, do you advise them to normally take out a working capital loan as well?
Yeah, that's a great point, and it's always discussed on every single deal. I would say I always recommend it. Um, life is gonna life, and things are gonna come up. Whether it's, yeah, a delayed payment. I work a lot in like the assisted living space, as I mentioned. And some of those are private pay, but some are government pay, insurance pay, and that can delay things. And sometimes the transitionary period even extends that further than the 30, 45 days to 60, 75 days. And the last thing that you want to worry about in the first 90 days of taking over a new business is, oh man, am I going to make payroll at the end of 60 days? That you're going to lose a lot of sleep if you enter into business that way. Um, and you really want to spend that time with the seller, going through that transitionary period and learning as much as possible. There's going to be stress no matter what, but if you can help subdue as much stress as possible, finding that appropriate, adequate working capital amount is definitely going to help ease your mind as you go into business ownership.
Okay, Zach, where can we point people to online to connect with you if they have questions, want to do a deal, whatever it might be?
Yeah, yeah. Reach out to me through X, my X name, Zach Positions, or LinkedIn, Zach Schmidt. Otherwise, my email address too, always open. It's Z Schmidt, SCHMID as in dog, T as in toy, at G period bank.
All right, we will link to all of that in the show notes. Thanks for your time today, and I'm sure we'll be talking real soon, brother.
Ryan, it was a pleasure, my friend.